I get flooded with my DMs every single day. Sham, how do I start trading? I need money to start trading. How much bread do I need? Where can I start trading? Relax. And that is why I'm here today. I'm going to be teaching y'all boys how to start trading from scratch. I'm going to be telling y'all boys how to start trading with money, without money, how you can practice without bread and stuff like that. And just give y'all the overall rundown of what trading is inside of the market, right? Now, I ain't gonna lie. I'm not one of these type professional type niggas. I'm a real nigga. Yeah. But I did make y'all boys a presentation today. So I hope y'all enjoyed this little slide. We're going to be using this to go over the basics, like the literal basics of the market. And then later on in the video, we will be going inside of the actual charts and talking about candlesticks, talking about trends, and talking about the different time frames and the time setup that we going to be, you know, we're going to be trading and stuff like that. But yeah, let's get into it. Boom. All right, first off, now it's been a long time since I used PowerPoint. I don't know how. Do I just click this? Yeah. Oh dang. Okay. Yeah. I see this down there. All right. Boom. So how to start trading? First thing, what is trading? All right. This slideshow. Okay. Now look, a lot of y'all get confused with day trading and investing. Investing is when you hold a trade for a long period of time. Day trading is when you were in the trade for a short period of time, such as anywhere from a few hours to a week. You feel me? Nothing more than that. Once it gets to that month period, then that becomes investing. You feel me? So if it's over a year or anything like that, you're investing your bread and you're not even planning on looking at it, that's investing. But when you have trades that are set up just to hold for like a week at most, that's just day trading. Okay. And what trading is essentially, and I'm going to be showing y'all boys that better in the charts, you betting on current price going up or going down. So let's say we started off at price at $5. If you want to buy at $5 and you want to earn money, the price has to go from $5 all the way up to $6 for you to earn just $1 if you got one share. Now, if you're selling the price and you're starting at $5, in order for you to make money, the price of that current price has to go down. So if it starts at $5, it has to go down to $4. You get what I'm saying? In order for you to make $1. Now, there are different sections or groups or whatever you want to call it. I know y'all boys have heard about the Forex groups and them scamming people like a long time ago. I know, so y'all know about Forex more than likely. You know about futures and you know about options. Now, one of these things just snuck in, and that is crypto. I know y'all been hearing a lot about Bitcoin since probably like 2020 when it had that little surge when Trump got in office and stuff like that, and when COVID hit. Everybody was using Bitcoin, but we're not really going to be talking about Bitcoin today because that is new. So I'm gonna leave that to the side. Now, futures, anything economically, right? If that's what I trade as well, so that's what we're going to be talking about on the charts. Now, futures is anything economically. You can trade oil, you can trade gas, you can trade the indexes, which that's what I trade, NASDAQ and SPY or ES. Yeah, you can trade milk, all different types of things on futures, right? It's just anything economically you can trade. I say cannot. My bad. But Forex, for example, Forex is currency pairs. Forex stands for foreign exchange. Okay, Forex is really good because of the time frames and all of the different types of stuff you can trade. You can trade all week basically. You feel me? That's where most people hold their trades for an entire week. But the thing is, it's the lot sizes and all the different types of stuff. I genuinely don't like Forex. I'm gonna keep it a buck. I might be the only nigga that don't like it, but it's the only reason I don't like it is because of the lot sizes. Now, options is dealing with stocks and companies. All right, so when you hear day trading, you think of the stock market if you're brand new, right? Which is true. That's what we all trade, is the stock market. But the stocks that people buy are from businesses, right? And that's where you trade options trade now, like Apple, Microsoft, Nvidia. All of those are stocks, right? Those are companies that you buy from. All of those are they not essentially stocks? Yeah, they are stocks. I'm bugged out. You feel me? It's like 1 o'clock in the morning and I'm making this video. Clap it up. I should have been made this. Now, options, I will leave trades in those for like a week so they can build money. So if I have like $20,000 or $30,000 sitting in my options account, I'll leave a trade just plan out for a week or a month, just building me money passively on the back end where I don't have to look at it. You get what I'm saying? It's basically like investing, but like, shorter periods of time. So it's technically day trading. Now, futures, I trade every single day, and that's because of the time frames. Now, the reason I don't trade options as much as I used to is because of the fact that you're so restricted, like you're so chained up when you plan. I mean, not plan. You're so chained up when you're trading options, man. You cannot trade options as much as you can trade forex and futures. And now forex and futures, they have, and these are the pros and cons that I'm listing. You feel me? I got that. Oh snap! Dang. Okay. The pros and the cons about all of these. Forex, you can only trade. Forex, you can trade them all week. You feel me? When the market opens back up, when the market open back up on Sunday, you can trade from Sunday at 5 p.m. Eastern time, I believe, or it might be Central time. No, 5 p.m. Central time, which is for me, and that'll be 6 p.m. Eastern time, and then that'll be 3 o'clock Pacific time. You can trade from then, that Sunday, all the way to that same time on Friday. So 5 days out of the week. You got what I'm saying? Futures trading. Futures week is basically the same thing, but every 1 hour out the day they have this thing called recess, and that's at 4 p.m. Central, 5 p.m. Eastern, and I don't know. I'm tired. That's when you cannot trade. That's when the whole market is shut off. You cannot trade during that time. And after that, when it open backs up, we have the different sessions, which should be Asia, and we're going to talk about that when we get on the charts later. But yeah, that's it. But options trading, you can only trade for like 7 hours. The market opens up at 9:30 Eastern time, and then it closes at 3:30 Pacific time. No, not Pacific, Eastern time. Why would I switch? Apps and brokers, these are the apps that we do use. Okay, this is the apps that I use to trade, and I will recommend y'all using. So for forex, futures, TradingView, and Notion. Now TradingView is the app we analyze our charts on and stuff like that, and Notion is the app that we journal our trades and all the different types of stuff, which I'm gonna be showing y'all boys that later on today. We will be using TradingView, prop firm of your choice. I don't trade forex, like I said. When I was trading for forex, I was using a Real Deal live account, and I was using Oanda. That's my live account. So if you do end up learning about, which we're going to talk about prop firms at the end of this video. Once you do hear about prop firms, you're like, oh, I want to try that. You will have to do your own research. Only one I really know about is what's that word? I mean, FTMO. That's the only one I could think of. OrandaForex.com. Those are the two brokers you can use. Now, brokers are very important. We're going to be talking about that when we get on the charts. And then TradingView, prop firm in Yosin. TraderVate is the cheaper option. TraderVate, you only have to pay $50 a month, or you got QuantTrader or MotiveWave. Those you have to pay like $25 or to $50 a month as well. But that is constantly coming out. I think TraderVate is, don't get me wrong now, I don't know if TraderVate is I think it's TraderVate to open the account is $50, and if you fund it, you are good. You don't have to pay anymore. But with QuantTower and MotiveWave, you have to pay constantly every month. So yeah, it's the TradingView logo. That's the Forex.com. Do not get this confused with Oanda. This is Forex.com, and that's QuantTower. Technical analysis, paper trading, and TradingView. You know what I'm saying? This is what we're gonna be talking about. That's it. All right, it's time to go to TradingView. Let's get into it. This is TradingView. Y'all's probably would look a little bit different than mine because mine is, tweaked and stuff like that. I have the things that I just trade on the side, which is ES, micro and mini NASDAQ, and then now I'm trading gold. You get what I'm saying? So these are the things that I trade on a daily basis. You guys will probably have a bunch of different things on your side. You'll have a bunch of different little icons and stuff like that. What you're going to do is first you're going to make you an account at the top and get you the 30-day free trial. That's what you need, the 30-day free trial. Now, why you need the 30-day free trial? It's because of the fact that it gives you the ability to back test and all that different types of stuff. That is free if you have a credit card. You know what I'm saying? If you got a card or anything, not even a credit card, a regular debit card, you can use a regular debit card. If you use that, you can trade for completely free and get not completely free. You can get some of the premium options for completely free for a whole 30 days, which you really do need those. Like to have the different layouts and stuff like that. Just please get that thing. Get it for 30 days, please. please. Next thing you will need, if you do have a little bit of extra bread, it's only like $4. If you are going to trade futures like me, because that's what we're going to be talking about, you do need live trading, right? When you're starting off, it's only $4 a month, you feel me? So please invest into that so you can actually trade and you're not going to be delayed, you feel me? Yeah, though, let's go into the NASDAQ and let's actually talk about trading for once. I know. You want to type in, because your stuff not going to look like mine, you want to type in NQ and you want to click on E-mini NASDAQ futures, right? You want to click on this, launch charts. Boom, it's going to take you to the charts right here. As you can see, my charts I got different indicators and all of this different type of stuff, which I'm gonna just show y'all my indicators, because if you want to use the indicators I'm using in this video, I'm gonna let y'all boys see that. This is one, ICT kill zones and pivots at the top. This little candlestick right here is called power of 3, and this other one is the first presented fair value gap. All right, so first FFG, that is what the other one is. Now let's go over candlesticks real quick so you guys are not confused about those and how they are, what they signify. All right, so candlesticks. What are candlesticks? What are they? First off, candlesticks are just prices, right? That's just price. That's current price action, all different types of stuff. That is what price is. That is a representation of price. So if we go to the charts right here, price started over here at 22,079.5, right? That is where price started at. Price then continued to rally up 90 points with this candlestick right here. 94 points, 95 points, we'll say. So what does that mean? This green candlestick tells me that price started at this current price, 22,078, or wherever this price stands. Sorry, what is this? Hold on, what did I say? 75 at first? 22,079 and 50. Price started right here and then continued to build up over time. This is the 15-minute time frame. So over 15 minutes, this candlestick proceeded to push up. It proceeded to push up from its current price. That is why it's green. Now red means if it started at right here, price started right here, and in 15 minutes it proceeded to push below its current starting price, right? So let's do this real quick. Let's get this current price right here is going to be $5. Okay, we're going to say this is $5, right? So price starts at $5. Now if you are buying here, in order for you to make money, price will have to go upwards for you to make money. So it had to go from $5 all the way up to $10 up here. Let's just say this 10. If you did this, if you bought in right here, and let's change this color to green so y'all boys don't get confused. If you bought in right here, that means you started off, bought at $5. Price ended up rallying up, and this is a 15-minute candlestick. So in 15 minutes, price went from $5 up to $10 up here. Let's write that down, and you just earned yourself $5. That's essentially how trading works. That's how candlesticks work. So the candle started right here, open right here, and it pushed up in the span of 15 minutes. That's the different time frames, and I'm gonna be explaining that later too, right after this. In 15 minutes, price went up from $5 up to $10, and that's how you earn money. You just earn yourself $5. Now on the NASDAQ, points and stuff like that are different. So on the regular mini NASDAQ, if things move just one full point, because we got 0.25, 0.50, 0.75, and then a full point. Okay, so once price gets to that full point, it moves up a whole full point. It is $50 that is made. You can make $50 with just 1 point being moved. That's why a lot of people trade micro NASDAQ, because it actually do start at $5. Yeah, and it's vice versa with the selling. So the red candle, which is selling, that means if you're selling the price, it's going downwards. So if it started off at $5 and let's say it goes down, it ends at, let's say it goes all the way down to $2, right? That means in the span of this 15-minute candlestick, oh, okay, there we go. In the span of this 15-minute candlestick right here, and let's make it red so y'all boys aren't confused. Span of this 15-minute candlestick, price started right here and then proceeded to push down lowers to $2, so you lost $3 with this trade, right? So yeah, another thing, wicks. Okay, let's talk about wicks real quick. So wicks, what are wicks? Why are these little things? Now wicks are where price has been. Okay, price has been in this area, right? So let's just keep the candlestick red. It's vice versa for if the candlestick is green or bullish. Bullish is going up, bearish is going down. You will hear a lot of people say bullish or bearish. So let me give you a little terminology. Bullish, if you hear bullish, that means up, right? How I remember that? Bull horns go up. Bearish claws go down. So bearish means down, bullish means up. Say it with me. Bearish means down, bullish means up. Okay, so this is a bearish candlestick right here. Now this candlestick tells me that price came up this way, right? Price in the span of this 15-minute time frame, price came up this way, but then proceeded to go down and close down here, right? That's what this wick tells me. Price was in this area, but it came down and closed down that way. Okay, so yeah, that's all the wick is. That just tells me where price has been, and that's really it for candlesticks. It's nothing too simple and nothing too complicated with them. They are very important, but don't overcomplicate the candlesticks. This is where a lot of people feel like they are intimidated by, because they don't understand what the candlesticks stand for, and it's this. That's all it is. It just stands for price. It's very simple. Now the market has different time frames that a lot of people trade on, right? Now time frames help you understand the whole story of the market. It can give you a better entry in the market. The whole thing. Time frames are something you need to master, right? And I'm going to be breaking that down. Like I've been saying earlier, this is the 15-minute time frame that we're on. And let's move this over here. How can you tell? If you see at the top one of those things that's highlighted or up under there, it'll tell you the time frame. You see this say change time interview. This is 15 minutes. I can go down to the 5-minute, go to the 30-minute, same, so on and so forth, right? Yeah, so what does that tell me? So the time frame are the candlesticks, right? So each candlestick represents the time frame. So we go to 5 minutes. Each candlestick on this 5-minute time frame happened in the span of 5 minutes. So this candlestick opened at, let's go to 12. Right, this candlestick right here. No, let's go back. Okay, this candlestick right here opened at 8:30. And it closed at 8:35, and then another candlestick opened, right? And that's the same thing for overall the whole what's in that. Now the reason that time frames are important is because lower time frames give you more information. What I mean by that, lower time frames show you a lot more than higher time frames do, right? Because it's more candlesticks. It's more candles being open and closed at a lower time frame than on the higher time frame. So you typically want to use your higher time frame lower time frame for executions, and the higher time frame to understand the whole story of the market. So on the 4-hour, we can see that we are bullish, right? And remember, bullish is up. Okay, so we on the lower time frame, the higher time frame, we can tell us that, all right, the story for this market right now is bullish, right? We're pushing up in the market. We're climbing up. We've been rallying up on the pad for the past few days. This was on Monday. Today is Wednesday. So on Monday we've been rallying up all day. Okay, perfect. All right, that's enough to tell me that, okay, I might need to be looking for buys. When can I get in for buys? We have these huge imbalances. Okay, when you see stuff like this area, like where it's a big gap, this is also known as a fair value gap. All the fair value gap is a gap inside of the market. All right, so like this is a fair value gap right here. This is just a huge gap inside of the market, and people just use this to enter off of and stuff like that. So yeah, and we usually retrace to this area, like, push down like this and push back up off of it. Use that to rebalance in the market and stuff like that. It's nothing too crazy. Boom. Now that y'all understand candlesticks and time frames like that, we're going to be going over trends. Okay, and trends are very simple. Okay, but I'm gonna tell you a better way to identify trends, because I can tell you, oh yeah, we're in the uptrend, but how can you identify the trend that you are in? Example, right now we're in the uptrend. Right, we're in the uptrend, but how do I know we're in the uptrend? First off, because we are making higher highs, higher lows, higher highs, higher lows, higher highs. You feel me? So what I mean by that, if we're in the uptrend like this, we're going to be climbing up in the market. Boom, bam, boom, bam, like that. This is the uptrend. Why? Higher high up this high. We got a higher high right here. Oh snap. Got a higher low right here. And then higher high right here. And then a higher low like this. This is called a uptrend. This is an uptrend, right? So, and as an uptrend, now as a trader, if you are going in for buys, you're trying to follow the trend and stuff like that, that's what you should do. The trend is your friend. Always follow the trend. But if you're trying to follow the trend, what you would like to do is to get in on these pullbacks, right? You would like to get in on these pullbacks. So at this higher low, which you know you're not going to always be able to identify them perfectly. Don't get like, if niggas tell you their strategy is 100%, they are lying to you. I'm just being honest. You're not going to be always able to get it perfectly, but you can get close, right? You know, and you aim for these highs up here. Nice. Let's do a 2-to-1 risk to reward ratio. Let's drag this out like that and drag this up. There we go. Nice little 2-to-1 risk to reward ratio. You got in at the bottom tick, top tick, nigga, you're power. All right, so boom, that's the uptrend. Downtrend, the same thing we're creating, but instead we're creating lower highs. So we start up here, lower highs, lower lows, lower highs, lower lows, like that. So you know what I'm saying? It's gonna be presented like that. Now, how you do that is you look for the peaks in the market. Now, this is completely hindsight. You will pick this up after the things are done with. So, this, for example, you can see that we got a high. We got this peak up here. We peaked up here. Then we started to make a lower high right here. Then we had a lower low down here. Then a lower high, and so on and so forth, until we ended up coming all the way down to this area down here, right? Yeah. So y'all get that? That's the basics of trend. That's how you can identify a trend or whatnot. Now, this is the last thing with dealing with the charts, because I can talk about the charts all day, but the best way to actually learn how to trade, the best way I learn how to trade, my nigga, is hopping my tail on the charts. I promise you. Once you get on here and you learn all this information, you find out where to go, which I'm going to be showing y'all boys how to actually paper trade with fake money and actually learn how to trade. But once you get on here, you have to do it yourself. You have to get in here and do it yourself, or you can get you a mentor or whatever. But yeah, have to do it yourself. So boom, this is how you do it. First off, like we said, we're on the charts. You want to go to trading panel down here at the very bottom. Now, if you're on mobile, I will screen record this. All you got to do is click buy at the top, and then this trading panel will pop up. Boom. You want to click on paper trading. Click that. Click connect. Boom. This is paper trading. Now, your account might not be 100K. It might be 100K. It might start off at 50K or whatever. It doesn't really matter. Okay. Now, you would like to enter in for you would like to practice your trades. You would like to use this to practice your trades. Okay. So let's change this to one contract. So let's say you want to get in for sales. Get in for sales. On here you can have your stop, set your stop loss up here, put your take profit somewhere down here like that. You know what I'm saying? This could be a full-blown trade in itself, right? And you want to just do this, practice this during the time. Oh, time frames. I almost forgot. There are different time frames. Okay, so I'm Central Time, so I'm gonna try to put this in Eastern Time because everybody mainly use Eastern Time. So first off, let's put this in up here. All right, bet. First off, we have New York AM session. Okay. New York AM starts off at 9:30 Eastern Time. That's when it opens, okay? Now, you can, like I said, with futures, you can trade whatever time you want. But this is when the market is the most volatile. Around this time, from 9:30 all the way to 3 p.m. Is it 3 p.m.? I think 3 p.m. Yeah, 3 p.m. All the way to 3 p.m. Eastern Time, right? This is EST. Now, the next session is Asia session, right? And that session starts at 8 p.m. Eastern Time all the way to 1 p. Is it 1 or is it 2? No, it's 2 a.m. Eastern time. Okay, my bad. Like I said, these are different time frames. I'm not used to this time frame. I'm comparing it as we go. And then you have the last one, which is London. London starts at 2 a.m. all the way to 6 a.m. Okay, these are the different time frames right here that you would like to trade in. Make sure y'all boys get a screenshot of this. Why you would like to trade in during this time is because the market is most volatile in the time. This is when you have the best price action, the best times to trade or be in this time. Okay, so make sure you get this screenshotted and you go ahead and start practicing. Now, like I just showed y'all boys, paper trading is how you connect and how you get in the trade. We're down $20 right now. Huh, bad. But yeah, down $20. Yeah, now, of course, y'all boys want to learn how to make money. So let's talk about brokers and prop firms. Okay, me personally, I do both. I trade with a broker and a prop firm. Prop firms are ways you can make money, like you can make a lot of money with little money. So a prop firm, you can start with $200 and run that $200 up to 15 bands if you're actually good at trading, right? You have to be good at trading. Overall, you have to be good. I wouldn't put my real money into it unless I was actually pretty good at trading, right? I showed y'all the brokers earlier, which would be for Forex and for Forex, it'll be Forex.com and Oanda. Futures is Quant Trader and Quant Trader, Tradeovate, and Motive Wave if you're on Mac, because you can't, Mac doesn't allow you to use Quant Trader. So if you do want to have order flow and stuff like that, you have to use Motive Wave on Mac. But those would be my brokers. Now prop firms, we're gonna just be strictly talking about futures. Do look up prop firms if you're trading Forex. But with futures, I trade Top Step, Alpha Futures, Take Profit, My Funded Futures. Those are my top 4 right there. They all have their pros and cons. Top Step is pretty known, and they just are the most reliable for you. Now Alpha Futures is a new trading company, but they do have a sister company for Forex, and that's Alpha Capital, that you can also trade. That's a prop firm for y'all boys right there. If you trade Forex, Alpha Capital. They have a sister company and they've been running for a long time. Take Profit is pretty new, but they are really good. They offer daily payouts, so that's the closest thing you can get to a live account. My Funded Futures, they have another sister company as well with Forex. I think it's My Funded Forex or something. It's something like that. But they're a pretty good company as well, and they're probably the cheapest out of all of them, right? So, that's essentially how you start trading. What is trading? How you can start practicing and all of that. I just gave y'all all of that in the most simplest way ever. All right. If you want to learn from me personally, though, I do sell a course. Nah, that sounds crazy. But yeah, if you do want to learn from me personally, sign up down below. I will give y'all boys a call. We're talking about all of that different type of stuff. You can set up a one-on-one private meeting with me and learn from me personally. But yeah, though, other than that, that's it, man. Go learn. We will be talking about technical analysis and stuff like that later on. But God loves y'all, though, boy. I say boy. God loves y'all, boys. I'll catch y'all in another video. Peace out.